Welcome, everybody. Thank you for joining today's webinar hosted by Trustworthy, the creator of the Family Operating System. It's a digital vault that keeps all of your family's important information secure and accessible, whether you are at home or on the go. I'm Don Kirkpatrick, Trustworthy's Director of Content Strategy, and I'm here today with two special guests, Karl Susman and David Thompson. Karl is a nationally recognized insurance expert, media personality, and the owner of Susman Insurance Agency in Los Angeles. With decades of experience, Karl has become a go-to authority for major news outlets, frequently appearing on NBC, CBS, ABC, and Fox Television. He's also appears on radio and podcasts. He combines a deep expertise with style that demystifies complex insurance topics for everyday listeners. Karl's also a sought-after expert witness. He consults on agents and brokerage standards of care in high-stakes legal cases. And David's a Florida native. He spent 8 years as a commissioned officer in the U.S. Army and U.S. Coast Guard, and then he began his insurance career as a retail insurance agent in a family-owned agency. He's been a licensed Florida agent for almost 40 years. For the past 35 years, he has presented more than 3,000 seminars around the country dealing with all types of property and casualty insurance. David wants this to be known, especially, he believes he smokes the world's best barbecue.
Well, that is really the most important thing that we're going to hear today.
Yeah, we'll, if we have time, we'll get back to the barbecue recipes. So, I'll be asking David and Karl questions about home insurance in regards to disasters like wildfires, hurricanes, and floods, what your home insurance might not cover, what steps you can take before and after a disaster to stay protected, and a lot more. This is the first category is really understanding what coverage you have and how to evaluate whether you have the right coverage. First question is for Karl. Karl, could you talk to us about how people can tell if they have the right insurance where they live, and what are the warning signs that they might not have enough coverage if there's some disaster that happens in their neck of the woods?
Sure thing. Thanks, Don. Again, I appreciate the time to be here today to try and help out, get some good information out there for folks. You know, it's always challenging to know, do you have the right coverage? But it's very easy to know when you have the wrong coverage. So I think working backwards from that idea, usually if you're shopping around and you're looking to get different options for coverage, and you see most people, most companies, they're in a range here, right? You've got the higher ones here, the lower ones here, and then all of a sudden you see something that's down there somewhere, way out of the market. That's probably a red flag for you right there. And we're not even talking about what specific coverage we might be dealing with, but you want to stay in the range, right? If something is too good to be true, the chances are it probably is. Now, depending on where your home is, you also want to check for specific types of perils that might not be covered under a standard homeowners policy. Whether you're in Florida or California or anywhere in between, we know we have fire. That's something that we all think about. But there are other types of coverage that you need. For example, again, on the West Coast, you might also want to think about earthquake insurance. On the East Coast, you might want to think about those hurricanes. So we have to have those specific coverages to look out for as well. And my best advice would always be to start with the basics, talk to someone that is familiar with the area, and then expand from there depending on the actual area that the house is located.
And can you talk a little bit more about like how would additional policies, you would have to buy like a separate policy or a separate rider? Is that correct?
Sure. Depending on what the policy is, there usually is the option either to add on to your policy, like you said, to endorse, which is just a fancy name for saying add on to the policy. And you can do that with certain things like jewelry, for example, or firearms, things like that. But in the event you're looking to actually get an additional peril, something that's covered in addition to what the homeowner's policy covers, like earthquake, like wind in certain areas, or flood, those would be separate policies that you would purchase. Flood insurance is available through the feds, through FEMA, through the National Flood Insurance Program, and you can get that through any independent agent. And also private companies also offer flood insurance, and a lot of people aren't aware that they are very competitive, and they are typically less expensive than what you would get through FEMA, and they're with an actual insurance company, not the U.S. government's organization, which who knows these days, especially how that would ever turn out if there was ever the need. And for other policies like earthquake example, again, you can purchase earthquake insurance from private insurance companies. It will be a separate policy that you would pick up in addition to the homeowner's policy. So it's a little bit of both. Some things you can add on to the existing home policy. Most things that you're looking for to add on will actually be separate policies that you'll need to purchase.
Sure. A follow-up question on that is, I live in the Seattle area, and we're prone to earthquakes, not as many as you have in Los Angeles. So I bought separate earthquake insurance, but through my current insurer. Should I have maybe shopped around a little bit more? I just kind of automatically went to my home insurer.
Yeah, I mean that's a lot of people will do that, and in certain states like California, for example, it is mandatory that the insurance carrier that has your home insurance offers an earthquake insurance endorsement for you. But that definitely does not mean it's the best policy that's out there. I find that 9 out of 10 times you'll get a better policy for less money if you go to a carrier that specializes in just earthquake insurance. So yeah, for you, I would absolutely tell you, talk to an independent broker, say, hey, I'm looking to get earthquake insurance. Tell me what earthquake insurance companies are out there and what their offerings are.
Okay, great. Thank you. David, I want to talk to you about how actual cash value and replacement value differs in disaster claims. Like, which option makes the most sense for most homeowners? Now, I imagine it's different if you live in a place that might get hit by a hurricane every other year, but can you talk about which of those is better?
Yeah, thanks for having me, and thanks, Karl, for reminding us in Florida that hurricane season starts on Sunday. My industry has a strange lingo. Actual cash value, we call it ACV. Well, I don't call it ACV. I've made up my own term, and I call it YSV for yard sale value. Or you go to the Goodwill or the Salvation Army store and buy stuff. There's nothing wrong with those stores. I've actually bought this shirt, might even come from there because they're $4. But actual cash, let's start with replacement cost. That is, you get new for old, no matter how old it is. And most policies, I'm talking generic policies today because they're all different. Most policies for replacement costs say, we're going to depreciate your payment when we pay you, but when you show us the receipt, we'll pay you the difference. So if I had a TV set or let's say a refrigerator that cost me new, it cost new today is $1,000. It doesn't matter what I paid for it 5 years ago. Cost new today is $5,000. Let's say the adjuster determines using their tables and stuff that they're going to depreciate that 50% because it has a lifespan of 10 years. Now, everything is different. We're going to use those numbers. So a $1,000 refrigerator, I'm going to be paid $500. Now, that doesn't seem like much, but just look around your house at your personal property or contents and start adding up. Pots and pans and dishes and cooking stuff and clothing depreciates fast. And furniture. In my house, replacement cost, my house is almost brand new, 2 years old. I would estimate that our personal property is, I'm going to say 50,000, maybe a tad low. So most of our stuff is new, but where I used to live in Tallahassee was older stuff. So you could have a $30,000 loss just to your own personal property. Actual cash value could whack off 15, 20, 30%. And you don't have the money to go back to Lowe's, Home Depot, Target, and buy the stuff back. Whereas with replacement cost, you go buy it, you show the receipt, and you're paid the full cost, no matter how old it is. And it's the same concept on the structure itself. My old house in Tallahassee, the roof was 15 years old. And I replaced it on my own, but had that been damaged in, say, a hurricane in Tallahassee, it was about a $15,000 roof job. I wouldn't receive much payment because of the massive depreciation. The savings are small. Typically for contents, personal property, the upcharge to get replacement costs is around 15%. It varies by company. I'm lucky in Florida because my insurance is very cheap here. I'm only paying about $1,300 because my house is brand new, built to code. I'm paying probably $250 a year to get replacement cost coverage. To me, as an insurance agent who teaches other agents, I personally don't have an idea when actual cash value is good. The savings are so insignificant that a couch and a lazy boy can wipe it out. People that want to go to ACV on contents, they wish they did.
Yeah, I can totally understand that. Hey, Karl, question for you is, when it comes to insurance companies considering somebody living in a high risk area and having what impact that might have on their insurance, how do insurance companies actually even determine whether a home is in a high risk area?
First, Dave, I'm totally stealing yard sale value. That is the absolute best way to try and explain it. I thank you for that. As far as the question goes with determining high risk, again, high risk is it's not an insurance term, right? And it's not an objective term. It's not black or white. What one insurance company might determine as being high risk, another might say is medium or low. These, again, are not industry standard terms. So a lot of times you'll have someone that's purchasing a home and they'll come to me and they'll say, well, am I in a high fire area? Well, maybe to some insurance companies you might be, not to others. Or am I in an area that is potentially going to be affected by an earthquake? Am I in a liquefaction area? Yes, we actually get people that get that granular and then will ask us questions like that. And my answer is always the same. Well, it turns out that I have one insurance company that loves that area. They say that it's a safe place for earthquakes and their price is reflected. I have another company that won't even write a policy there because they feel that the risk is too high. So it's very, very subjective when it comes to, are you in a high risk area? Or I guess another way of putting that is a harder to insure area. And it again depends on the type of insurance you're looking to purchase. If you're looking to purchase fire insurance, then where your home is located in relation to native brush or how likely it is for there to be a fire there. Is it up a small street, a small, snake street that a fire truck couldn't even get up if it wanted to? That's going to be a lot more expensive and more difficult to obtain fire insurance. However, that might not be a problem when it comes to getting coverage for things like water damage or theft, because you're so far off the beaten path, the likelihood of somebody finding their way to your house to break in is pretty low. So I think that if we try and look at this more piecemeal versus is my house a high risk area or low risk or anything in between, it makes a little bit more sense, because it can get maddening sometimes when you try and say, well, I don't understand. I have the best burglar alarm system, or I have smoke detectors, I have sprinklers in the house, I have all of these things. And why is it because I'm in a high risk area? Well, no, it's just because based on the general characteristics, this is what goes in. Remember, insurance carriers, I call them the big brains. They've been doing this a long time and they have the advantage of big data. They know what is the potential for a loss for a given location. So the best thing to do, regardless of what you hear, and people hear about this, and we are our own worst enemies. We'll go on the social apps and everyone is saying, oh, you don't want to live in this area because it's hard. It's a high risk. High risk what, right? Is just try and take a deep breath, look at the exposure and think logically. If you're in an area that looks like it's going to be a harder area to insure for fire because you're surrounded by trees, then be expecting that. If you're in an area that is near a river or beachfront, then you should be expecting to want to purchase a flood insurance policy, for example, or at least be aware that that's a peril that is going to cost you more than, again, if you lived at the top of the hill.
Yeah. And also, I like your answer. Part of your answer is don't take the first answer you get.
For sure.
You may hear a different answer from another insurance company.
For sure.
Yeah. David, could you talk a little bit about deductibles? Like if somebody's shopping for homeowners insurance, especially in particular to disaster coverage, what should they think about the differences in deductible levels that they ought to be looking at? I assume they have a number of options.
Yeah, just real quick, I want to dovetail on what Karl said twice. He's mentioned flood and earthquake multiple times. Again, I'm talking in general terms, but in general, most homeowners policies do not cover damage caused by flood or earthquake. Now, flood could be like tidal surge where I live. It could be the river overflow, and it could be in the South, we call a heavy rainstorm a gully washer where water accumulates on the ground. Time after time, you see these flood events and people are in their house waist deep in water and saying, I never thought this would happen, and I thought my policy covers this. So those are two of the biggest concerns that people should have, flood and earthquake. Now on deductibles, I think most folks realize that, well, if I have a claim I'm going to pay some from my pocket. And most folks are thinking, well, in my case, I have $1,000 deductible on my policy. Our lingo is all other peril, AOP, because I have other deductibles on my policy. Florida, we're the special state, have a statute that says if a named hurricane, not a tropical storm, comes, your deductible is 2%. Now that's 2% of my $350,000 on my house. It's not 2% of the loss. So that's mandated in the statutes. The companies can do it differently. A lot of folks will go to 3, 5, or even 10% for hurricane. You can have a wind deductible around the country, which means any kind of wind. You guys, Don and Karl on the West Coast, you have a hurricane every now and then, but you guys have had wicked wind out there. You can have an earthquake deductible. Or I think they're usually 10 to 20%, again, of the coverage amount. And you have a theft deductible. Karl mentioned, or Don mentioned, a theft area. So it's not uncommon to find more than one deductible. So let's use my case as an example. I got $1,000 deductible, say, for fire, as an example, and a $7,000 for hurricane. When somebody wants to raise that deductible, say, I want to raise my fire deductible to $25,000, or raise my hurricane from 2% to 10%. I mean, 10% for me is $35,000. My question to Joe and Sue is, if something happens to your house, if you got $35,000 sitting around, because while you can save money on raising deductibles, it all comes down to, do you have the money to repair that damage without causing yourself severe financial harm? And in my case, I can stomach 1,000, I can stomach 7,000. It's not going to have a huge impact. I really can't change my 7,000 hurricane. If I wanted to go to 10% at 35,000, I'm going to ask myself, Dave, can I get 35 grand? And if I say yes, my next question is that going to change my lifestyle? So a deductible for me is different than Karl might choose and Don might choose and my neighbors might choose. It's all based on your preference. But you got to remember too, you can have that deductible more than one time in a year. Like Florida had 4 hurricanes in 2004. Karl on the West Coast, man, I pity y'all. You got fires all the time. So it's a cost benefit. How much can I afford to pony up from my pocket for this loss and not hurt me financially? And remember, this could happen more than one time.
Yeah, I mean, you could be in a situation where if you have to pony up 35,000, you're putting a bunch of it on a credit card, say, and now you're paying interest on top of that. So,
and I tell people they say I've got it. I say, well, like in my case, I worked hard for 53 years. I saved hard, and I could get 35. But would that change my lifestyle? People say, well, we travel and eat out a lot. Is that going to change your life? If not, the savings, you're not going to save 35 grand. You're going to save 5-10%. So look at your money and say, how much pain can I take for myself?
And so how often do you recommend people go back, and this is for you, David, how often should people go back and take a look at their insurance policies to make sure that they have the right coverage and continue to have the right coverage?
Yeah, in the thousands of classes I've taught, I've probably said thousands of times to insurance agents, check with your customer each year. And then I say, or so, because life changes. People can make changes to their house. They can make an addition. I just had an email last week. The client put in a swimming pool, unknown to the agent. You've got to change coverage for that. You could change from asphalt shingle roof to a metal roof. You can make all sorts of additions to your house. And life changes too. You could get married, divorced, have kids move out, move in, family move in, move out. You could start a side business that Karl mentioned, selling barbecue. You could buy a boat. You could buy an e-bike. I got 2 articles about e-bikes, the future disaster, I think. And people do these things. If you're weird like Karl and me and say, let me call my insurance agent first and see how this affects me. My wife sells insurance and she found all the time, you bought a boat. So I would suggest that a client should talk to their insurance agent every year or so. And if you're going to spend more than $1,000 on something, call them. Now, the problem is that some people buy insurance online. They don't have an insurance agent. And you now become your own insurance agent. And that's the disadvantage. And I've been one for 40 years. I'm a firm believer in a local insurance agent you go walk in and talk to face to face. If you've not reviewed your insurance in more than about 2 years, let's get her done, as the saying goes. Every few years, and same for a business too. Life nationwide used to say their insurance company, life comes at you fast, and it does.
And I take it you shouldn't wait for your insurance company to come to you.
Well, you got to remember what I do, Don. I teach people say you're in the ivory tower, but our insurance agents pay me to come in their agency and be the ivory tower. And if you're listening to this today, you got a local insurance agent and you've not heard from them in 5 years, something's wrong. I pick up the phone. It's like on Monday, I go for my annual physical with my doctor. I'm a healthy for an old guy. And why would I go 5 years and not see my doctor? You think about the life changes. It's the same on insurance. It shouldn't take 15, 20 minutes to review this. And Karl knows, he's retail agent. Karl's like, holy cow, when did you do this?
Yeah, we experience a fair amount of that. We try and reach out to everybody at least once or twice a year, and it's still going to be the people that don't even respond to the outreaches that have decided to add on to their house by a few thousand square feet and just figure, I have home insurance. Why would I change it? Not realizing. But again, to David's point, without a licensed broker to be able to review these things, you become the broker. It's all on you if you're doing it yourself. And let's face it, there are people, there's a reason you need a license to do what we do. And there's a lot of information that goes behind it.
What I'm hearing is I should maybe think about going to a different insurance agent because I have not heard from mine in a while.
Well, you're the perfect client, Don, because all you do is pay the premiums and don't have claims.
Yes. Okay. Karl, I wanted to talk about a little bit about what happens if you lose coverage. I know a couple people who live near me who have been informed by their insurance company that they're not going to be covered anymore, and they have had to start scrambling to find an alternative. What would you recommend for people who are in that situation?
Well, the most important thing is right now we are in what's called a hard market, and that's really countrywide, meaning that there are fewer companies that are writing coverage and writing policies, right? So in the event that you do need to go and find a policy, it's going to be more difficult than you think. So the best thing to do, first of all, is not be in that situation if you can avoid it. So put yourself on auto pay. Don't take a chance on the bill not coming and missing it. Don't take a chance on the policy canceling and your policy expiring at renewal. Go on auto pay, let them debit your checking account or let them charge your credit card, let them keep it on file. Just be sure that you don't cancel because of something you could have prevented. Now, if you end up in a situation where you simply get non-renewed for one reason or another, the most important thing to do is take action right away. Don't wait. A lot of people will get the notice and the law says, well, you have to give X number of days of notice, depending on the state, 30 days, 60 days, 90 days before the policy non-renews. People get that and they say, oh, gosh, that's so far away. I'll worry about that, the day before. Or maybe the week or two before, I'll start worrying about it. Then all of a sudden they're in a last minute dash to try and find coverage because it is very difficult to obtain. Remember, it could take weeks. It could take a month for you to be able to find the type of coverage that you're looking to get, if you can get it at all. And remember, if you've been non-renewed, chances are that's because there is something about your risk that is less than appealing to your insurance company. So don't assume that if one insurance company says, you know what, this risk is too high for me, that every other insurance company will say, oh, but we like it. There hopefully will be one or two out there that are going to be willing to, but take action right away. Don't wait. Don't assume you have as much time as you have and that you'll just be able to jump online, click a few buttons, find a new policy, or call a broker and they'll be able to get something for you right away. The market is actually so tight that in the past, normally a carrier, if they do give an option for coverage, they'll say something on the proposal, something to the effect of, this offer is good for, let's say, 30 days. The market has gotten so tight in a lot of states. That statement has changed, and it says this proposal is good until market changes occur. What does that mean? Well, that means that they might not be able to offer it for you tomorrow, because the capacity that carrier is willing to take on is finite. It's limited. So they're only going to take so many policies on. So you might get this quote on the first of the month and think, okay, I don't need it till the end of the month. A few days before you need it, you try and call back to get it, and they say, sorry, somebody else already took that capacity. It almost makes sense a lot of times, depending on your circumstance, to get that policy, even if you have your coverage that's expiring still in force. Cancel that, or have double coverage for a couple of days or weeks if you have to. But if you're in an area that's difficult to get coverage and you have the option to get it, take it. Don't wait. Don't say, well, I'll just keep looking around, because the option that's available today may not be available tomorrow.
Karl, my wife still sells insurance in a retail agency, and she comes home almost weekly saying, this guy named Karl called me, and his policy expires next Friday. It's got 8 days. And we know in our industry, it's not like it used to be. When I was writing it back in the 80s, you'd walk in my office, I'd take a pen, you'd walk out with insurance. And Karl is dead on, folks. The farther out, the better you are.
A question for either one of you is, if your insurance company says, we're not going to renew your policy, is there anything you can do to talk them out of that? Can you say, hey, what if I give you a lot more money? What are my options as far as appealing a policy cancellation? Or am I better off just to look elsewhere?
Well, you can probably get both of our take on that, because they're probably both valid. I think depending on the reason you're being non-renewed and where you are, there are times that you can go back to the carrier. I know that drone views right now are being used across the country, where they're doing flyovers and they're looking at conditions on the house. They might see what looks like water damage or mold and send out a non-renewal. Turns out it's not mold or water damage, it's a skylight, right? If you get that notice, you contact your broker, hopefully you have a broker, or worst case, you contact the carrier and you say, well, I got this letter saying you're non-renewing me because of damage to my roof, but that's a skylight, here's a picture. Then you're probably going to be okay. Again, don't wait, do it right away. But if there's a legitimate reason that they're non-renewing you and it's not something that you can correct in time, then the likelihood is you're going to have to stick with that, because renewals are just like reaffirming your vows, right? It's your chance to decide whether you want to stay with the carrier. The carrier gets to decide whether they want to keep you. So you both have the option at that point in time.
We have a lingo called residual markets or fair plans. Think of those as markets of last resort. Nobody else writes you, so the Fed or the state steps in. Karl mentioned the National Flood Insurance Program, NFIP for short. There it exists because most insurance companies don't want to write flood insurance. We have a residual market in the state of Florida for home. If you're getting dumped by Hartford, we'll say, our residual market, we call it Citizens, they'll write stuff that others won't, but there are times when even they say no. So there are times, as Karl would know because he's still selling us stuff, when you got to tell a client, I can't get this for you. But I'd echo again what Karl said, start way out. If you get that notice 90 days out, you should call your agent that day.
And speaking of appealing to your insurance company, what if you have filed a claim, David, and it's been denied? What is there an appeal process for that, for the claim itself?
Yeah, in 40 years, I've never seen a claim denied. We wish. Yes, they are denied, and there's some steps that you can take. My first recommendation, I'll say it again, is assuming you have a local insurance agent or broker, contact them. That's why you pay them. They can often assist, like Karl mentioned, the skylights and stuff. That an agent can get that thing taken care of pretty quickly. So talk to your agent and say, what are my options? The next step, I think, is if it's got to be a written denial. It can't be verbal. You can't deny verbally where I live. It's got to be in a writing. If it's denied, then appeal to a supervisor. Take it as high as you can. So suppose they stand firm and say, nope, no coverage. And you say, well, I still don't think this is right. Every state has a Department of Insurance or whatever they call it. Florida calls it Department of Financial Services. New York does. Oregon calls it something similar. But you got an insurance regulator. One of their main functions is the consumer hotline. You call them and say, I think this claim is denied incorrectly, and they'll investigate. To be honest, the success ratio is pretty low from my experience. Well, then you have the bazooka coming in here. You can hire what's called a public adjuster. The insurance company has their adjuster that they pay, but you hire your own public adjuster. You're going to pay a fee for that. Typically, they're going to get you $80,000. They're going to take a cut of that. It varies by state, but they're a licensed adjuster. They work for the customer, not for the insurance company. And if that doesn't work, probably the last effort is the last straw is to hire an attorney. And we've had enough hurricanes in Florida. As soon as the wind stops blowing, the attorney ads pop up and they take the case. It is not fast. A personal friend of mine hired an attorney after Hurricane Ian. It took 3 years and 2 months to get that case resolved. You know, they wound up getting more money. But pecking order, agent, appeal to a supervisor, Department of Insurance, public adjuster, and attorney. If they all say no, then the claim wasn't covered in the first place.
Okay, that's great. Thank you. So, Karl, one thing I wanted to ask you was, is there anything around climate change that's affecting the availability and cost of disaster insurance, and what homeowners can do in the face of this?
Are we allowed to say climate change these days? I think finally we can actually say that.
Well, Karl, I passed on that question. I wanted to hear what you have to say. So take it away, Bucko.
I think what happened was, but we couldn't agree that there was climate change. Now everyone agrees, but we still disagree on whether we caused it or not. But either way, I think we all agree that we're seeing climate changes. What's happening, and again, this is across the country, and this is only a part of the reason that we're seeing such disruption in the industry in general. What can we do and how it's affecting the availability is dynamic based on where you're located. The storms that you're seeing in different parts of the country, whether they be wildfire storms or hurricanes or wind-driven storms, or I think just yesterday I was reading that Austin was getting softball-size hailstorms happening. It just seems like there's something happening everywhere all the time, and that starts to add up. So I think that what we're going to see is we should have the expectation, the realistic expectation, that with increases of claims happening, and they are happening. If you ask around, ask your friends and say, hey, look, there are more claims happening. They just do. We're having more events and claims are happening. When more claims are happening and being paid, that is going to impact the premium. So expect your premium to be affected by that. Nobody likes it. I get it. Who wants to pay more for insurance? My position is, my job is to find coverage for consumers. So for me, the more options I have, the more competitively priced they are, the better my job becomes. What I don't like is when I'm in a situation where there are little to no choices, and the choices that are available are very expensive. And that really happens to be where we are right now. I think we're going to see over the next few years a situation where states are all going to start trying to deal with this in a different way. California is dealing with it with something called the Sustainable Insurance Strategy, which basically is just bringing California up to 2025 regulations like many other states are having. California is because there's so many people here and there's so much going on, we blow up the size of the problem that we see everywhere to proportions that no one else can see. So we'll learn the lessons here, and however we probably figure it out will trickle its way out to some of the other states. But what homeowners can do right now to try and deal with that is, again, first review your policy, see if there are any changes that you might be willing or comfortable making. I'll give you a simple example. most homeowners insurance policies, you insure the structure, right? The building itself. And then the insurance company will automatically give you an additional percentage of that for your personal property, right? Let's say you're insuring the structure for $500,000. The carrier might say, okay, and we're going to give you another 50% for personal property, or 250,000. You might walk into your house and look around and say, 250,000 in here? Yeah, I wish. It's not here, but you're paying for it. So if it makes sense for you, contact your broker, contact the carrier and say, you know what, can I lower that amount to save some money? Because there's no way I have that much here. I don't need to pay for it. So it might be time for you to be a little bit more granular with looking at your coverage and seeing where can you remove things that you don't need, or like was mentioned earlier, what's your threshold, right? How much can you take on? Are you okay if it turns out that you're going to lose more money out of pocket, but you can save more money on your insurance in the interim as the prices do continue to increase? Again, that's a personal choice. I think it's a great way that David put it. Is it going to affect your standard of living? Is it going to affect your lifestyle, right? And if the answer is no, then that should be a consideration. And it is very individualized. So do what you can to shave down coverage if your premium is going up to an area that you're not comfortable with. And normally I would say shop around, but that's a tough one to do right now. We used to be able to shop for insurance. Now we hunt. We, ready, aim, fire. I got one. Quick, pull it in. That's the industry right now. So it would be very disingenuous for me to say, oh, just shop around for a more competitively priced policy. That's just not the environment we're in anywhere in the country right now. So you can look for discounts with the carrier that you have. One of my favorite ways to do that is don't call your broker or your agent, or certainly the company, and say, am I getting all the discounts I should? Because I can guarantee you what the answer is going to be. It's going to be amazingly, they'll know everything about your policy and you on the spot, and they'll say, yep, you're getting all those discounts. What you want to do is you want to tell them, say, please give me a list of every discount that's available for my policy. Then you take that information and go back and look and say, oh, okay, I can qualify for this one. Oh, I can qualify for that one. And then you can go back and request it. But take the responsibility on yourself to be able to go through all of those things. And you might be surprised at some of those discounts that you didn't even know were available.
Mm-hmm. Yeah, that's a message that's been coming through a lot here during our conversation, is you need to be proactive about your insurance and not wait for someone else to tell you what you need or what you should have. David, one of the other things that we could talk about is bundling. Does that make much of a difference when it comes to your insurance?
Yeah, it does. And it's not, I know we're talking about disasters. It's not unique to that. Let me give you a real example. I have my automobile insurance and my homeowners insurance and my personal umbrella with one insurance company. They're a major national company. I'm a former military person, so Karl knows where I'm insured. It's USAA. I get a discount. It varies by company of about 10 or so % per policy. If I were to schedule jewelry, I'm not a jewelry person at all. I know a client who scheduled a ring, and the credit on the homeowners is like $300, and the premium on the ring was $150. They paid me to insure my jewelry. And I get a discount because of a bank with USAA, a longevity discount with them, a new building discount, claims-free discount. I have to look at my policy and see. And so I think when you bundle this stuff together, it does two things. It typically will save you money. But as a retail insurance agent for 10 plus years, I'm still licensed, I don't sell. There's a lot fewer potential gaps out there if you have one agent to deal with. If you got auto here and home there and you buy a boat, who's in charge of contacting you? And the courts will tell you, expert witness Karl, that they both are. And so as an insurance agent, I want all of your business, because then it's like you don't want to go to 4 different primary care physicians. So it's a huge advantage, and I can read Karl's mind. As he said, it is tough to do that today. We have companies where I live, they write only home. Well, some now say if you own a home, we'll give you a discount, but it saves you money and there's a more comprehensive approach to, I guess, one-stop shopping. That's the gold standard, in my view, tougher today than it was a decade or so ago.
Yeah. Okay, thanks. Karl, a question I had for you was, what kind of upgrades to your home should you consider to maybe affect your premiums or your eligibility for insurance? Things like, fire-resistant roofing, flood vents, any maybe structural changes to, protect you against a hurricane. Are there things that you ought to do, or do some of these things turn out to be more trouble, more costs than they're worth?
The answer is yes. Do them. Do all of them. It's funny. We forget that when we do things to prevent loss, it shouldn't just be about saving a few bucks on our insurance. Remember, loss is bad. It means something has happened. There's been a loss. So anything you can do to try and prevent a loss, you should be looking really hard at doing that. Now, if on top of it, you're able to get a lower insurance premium, that's a bonus, right? You're going to save money on top of it. But your primary driving factor for doing things to make your home safer is to make your home safer. People's homes tend to be their largest investment. Why would you not want to protect your largest investment and prevent it from having a loss as much as you possibly can? Look, the reason insurance carriers will give you a discount if you have a certain type of roof is because guess what? Their big brains and their numbers have shown them that type of a roof will experience fewer losses. That's a good thing, right? If you need to upgrade your pipes, if you have old galvanized pipes, right? And some carriers won't even write a policy for you that includes water damage because they know, guess what happens with those pipes? They leak. Do you want to have them leak? No. So are you going to repipe the house just to get the discount? Hopefully not. But you should be doing it because you're going to prevent there from being a loss, and it's going to give you more options for home insurance and potentially give you discounts. So I would absolutely look at the roof. I would absolutely look at the plumbing. I would look at, depending on where you are, they have something called an earthquake shutoff valve. It has a little mercury in it, and if it shakes a little bit, it shuts off the gas to the house to keep it from blowing up, basically. You want to look at that. You want to look at water sensing devices. There are devices now that you can get online for $200. And what they'll do is if it senses that water is flowing for a particular period of time unchanged, it will shut the water off. Well, that means that there could have been a leak somewhere that would have flooded the entire house if it had kept going. Some companies are offering discounts for that. In my opinion, that's the best $200 you're ever going to spend. I have seen claims where people, it always happens when they're on vacation for some reason, something breaks and water starts flowing. And by the time it's coming out of the house and the neighbors will see and call someone, the entire inside of the house has been wiped out from water. So I would say anything that you can do to try and reduce risk is not only going to save you from having a loss, that's good. It is potentially going to save you money on your insurance premium, that's a bonus. But most importantly, you want to look to see everything that you can possibly do and then make that decision based on what you're comfortable doing. Don't make it just about, well, if it's going to cost me $2,000, but I only save $200 on my insurance premium, then I won't do it. It's the wrong mindset. The idea is prevent the loss. Remember, no loss is better than a covered loss from happening.
Two quick things, Karl. I'm leaving town tomorrow for the weekend to go up to the Space Center. The last thing I'll do before I leave is turn off the water, go in my house and flush the toilets. We should all do that. And you mentioned fortify the structure. Yesterday's insurancejournal.com, you probably take that. The state looked at 2 counties in Alabama from, I forget what hurricane it was, 2 counties, and they determined that if every house had been built to the current code or renovated, insurance companies would have saved 75% of what they paid out, and consumers, because they wouldn't have hit their deductible yet, would have saved 65%. So, like you said, don't do it to save $200. Save the dadburn claim, which could be hundreds of thousands.
And on top of that, there's the inconvenience of dealing with burst pipes that you don't want to have to deal with.
Claims are not fun. I mean, there's a reason it's called a loss, right?
Yeah,
I
exactly.
like that.
Hey, David, I just wanted to get into one other area. Getting back to, we talked about filing claims earlier, but is there something that people can do before or after to make sure that if they are going to have to file a claim, or they might think they might have to in the future, is there something they can do to make sure that things are processed smoothly?
Yeah, and you sent me that list of questions to look at, and I said, I'm going to take this one on purpose because I am guilty of my own recommendations. A brand new house, let me see, in August will be 3 years in this house. When I moved from Tallahassee here, I didn't bring much stuff with me. I had a small U-Haul. I didn't bring a bed with me. And so almost everything in my house, except my computer desk where I am and my roll top desk behind me and a love seat, almost everything else is new. I've still got on my hard drive and about 6 cloud services, I think, pictures of my old house. And I promise within the next couple of weeks, I'm going to get my real camera out, not my phone, and go through and take pictures of everything in my house. I'm going to open up my kitchen cabinets and take pictures of my pots and pans. I'm going to pull out my drawer where my clothing is. I'm going to take pictures of my closet and stuff in the garage. It does a couple things. It documents that I owned it because I'm guilty. I don't save all the receipts. I just don't. The pictures show that I owned it. My mom and dad had 6 TV sets in their house, and it jogs my memory as to what I have, because after that loss, I'm going to steal that, Karl, the company's going to say, list all of your personal property and show us the replacement cost today. I could not do that. I couldn't do that for my living room. So take pictures, store them safely. They're on my laptop, on a cloud, and my sister has a flash drive. About once a month, we swap flash drives of my computer. Do that. If you have receipts, save receipts, okay? Call your insurance agent immediately. That means when the flames are still burning, call the agent. Don't wait a day, a week, or a month. That can hurt you badly by delaying the report. Got the photographs, prevent further damage. Like in my case where I live, if I got an opening in my roof, I've got tarps in my garage, get up there and blue tarp the roof, prevent further damage. If somebody vandalizes your house, smashes your sliding glass doors, call a board up company, get them out there, prevent further damage, take pictures of that and save the receipts. Don't make permanent repairs until you talk to the adjuster. Don't ever throw stuff away. Even the pictures aren't enough, because the policies, most of them say, show us the damaged property. I've seen claims denied where the adjuster said, well, where is the couch and chair? It's at the dump. That is not good. So we're getting a theme here, I think, from Karl and me too. You got to be proactive. I don't expect to have a claim, but when I take my pictures in a couple of weeks, I'm going to be ready for that claim. If it happens, you cooperate with the insurance company quickly, do what they ask you to do, and that's the best that you can do. Customers hurt themselves too many times by not using what, well, to me is common sense. Consumers don't understand this. Talk to your agent, work with the company, have your documentation before the loss takes place.
I'm going to just add one thing to David's, and I agree with all of that. We're old enough to know what Polaroid cameras were, and we used to tell clients, just snap a few pictures around the house. Now, just pick up your phone, turn on the video, and just walk around. It takes no time at all. And then we used to tell people when this first started, send us the pictures, because they would keep the pictures at home, and that would be no good, right? There'd be a loss, and they'd still have no way of having the proof. Now everything is saved to the cloud. People have it, but just take 5 minutes, like Dave says, take pictures, turn on the video camera, just walk around. You do not know what you have until it's gone. And having just been through with over 140 clients, total losses from the California wildfires, I can tell you that people do not know what they have until it's gone. So take 5 minutes and do that inventory and just walk around with your camera and save it somewhere so you have it as a reference.
And one more thing, Karl, I'm paramilitary. You always have a plan, a backup plan, and a backup plan. I have a cloud service, but I have my stuff on 2 flash drives, one at my sister's house, one at my wife's office. And about once a month, she brings home the flash drive, and I have a new one, and she's got it off-site. I've used the cloud services. They're great, but I want to have that oh heck back up too. I won't
Right.
use the other word. Oh heck.
Yeah. One of the things about shooting video, I mean, you may forget to take a picture of something, but that's in the room that is, you've taken 5 pictures in your living room. And, oh, I should have taken a picture of that thing too, but it appears in your video. So it can make the process a lot faster, I would assume, by video versus photo. We also, same thing, what you're talking about, don't keep things at home. Receipts, people have boxes of receipts. At Trustworthy, we actually encourage people to upload their receipts to our digital vault because it's really simple. You just take a picture of it, then throw the receipt away. You don't have to worry about where it is. And then you can access that wherever you happen to be at the time, even if your home is destroyed. We're running a little short on time, so I'm going to cut some of the questions that we were going to get to.
We're insurance people. We talk a lot. What do you want from us, Don?
These have been great. These answers have been great. And I did tell you, take the time that you think you need for these answers. So I didn't want to hold you back at all. Let me flip ahead here a little bit. Should anybody ever think about going without home insurance?
I got to answer this because it's my favorite. How many times have you heard, David? I'm sure you have. As soon as they pay off their mortgage, now I don't have to insure my house. And all I'm saying to myself is, let me get this straight. When you owe money on this, when it's a liability, you're paying to insure it. But the minute it shifts from a liability to 100% asset, it's all yours. Then you decide you don't want to protect it. It's bonkers. And I don't understand the mentality. So no, there is not a time that I can fathom when someone should not be insuring their home.
Agree. Totally. I wrote a blog called Isn't Self-Insurance Really No Insurance? Karl, we have email addresses. I'll make a note to send that to you. It goes back to the deductible thing, Don. Can I afford a $7,000 hurricane deductible? Yes. Can I afford a hurricane or anything taking my house down? $350 on the house, $175 on contents, a loss of use in a hotel for $50. Can I afford $500,000? If I could, I'd be buying ramen noodles. We're probably supposed to be nice today, but self-insurance is, in my view, I won't say stupid. It's a very bad decision. I can't imagine ever telling somebody, just drop the insurance and self-insure, unless they have $5 billion in cash sitting somewhere.
Yeah. And chances are they might have a very expensive house if they
Yeah.
might not want to take that loss anyways. So anyways, Karl and David, I want to really thank you for the questions that you've answered so far. I'll check in a minute if there's any questions from the audience. I don't know if there will be because you've answered so many questions so well. And I just really think that between the two of you, you've got 7 decades of experience in this. So
We're old.
To go there.
We're old.
To go there.
That's really amazing. So I really appreciate you took the time out of your day to join us for this. So I did want to mention one thing about Trustworthy while we have a minute, which we kind of look at Trustworthy as another type of insurance, really, for all your important information. We just heard from somebody recently who contacted us out of the blues, a Trustworthy customer. He said, hey, I lost my house in the Altadena fire, one of the big fires in LA earlier this year. And he said, I was just so happy that I had everything in Trustworthy already, all, my insurance policies and all my IDs and things like that, that it made it easier for them to get back up on their feet, even as they were dealing with all the shock and the trauma of, losing their home. So anyways, thanks again, Karl, David, and everybody who joined, and everyone have a great day.
Thank
Thanks,
you.
Don.